All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good news stuff for you today. And the first thing that I want to talk about is, oh boy, what did Coinbase do now? Coinbase's new direction is censorship, leaked audio reveals. Not necessarily censorship of crypto, but let's let the article play out. Brian Armstrong, CEO of cryptocurrency exchange Coinbase, revealed in a late September blog post that the company would prohibit employees from debating political or social issues, deeming this a distraction from the company's mission. So basically telling their employees this is what you can't talk about at work, even on your break. Armstrong doubled down on his position during a virtual all-hands held on October 1st, billed as an AMA, and Ask Me Anything, from which Motherboard obtained audio. The AMA was meant to further explain the company's new apolitical direction for those who might consider accepting a severance package that was offered to any employee who felt uncomfortable. Executives also explained when and where dissent would be appropriate and explained why they required employees to delete specific political Slack messages. So Coinbase just can't seem to it seems like the bigger that Coinbase gets, the more that they continue messing up. And this is just the icing on the cake. There has been so many in the past where Coinbase just continues to grow up and get bigger. And I think the bigger they get, the more attention they get, and the more bad things happen like this, like hiring hackers to help them out, or potential insider trading, trying to silence their employees, and much more. Also adding fees to their platform once they rope-a-doped a lot of people in. No more free limit fees. And more as time goes on. This at a company that works with cryptocurrencies intended to replace government banking systems in order to create a more free world, which makes absolutely no sense. Also giving their information to the FBI and various governments at will, just freely giving out any information, which I guess... that makes sense that they legally have to do that because they're dealing with money here. But again, Coinbase is definitely one of the most secure cryptocurrency exchanges, in my opinion. But at the same time, it is the most transparent in terms of you have absolutely no privacy on it, and any money you put on there is just immediately reported to the government. So if that's something you're trying to avoid, Coinbase is definitely not your thing. During the meeting, Armstrong claimed there is a silent majority at Coinbase that agreed with his decision, but feared reprisal from colleagues. Yeah, because it's a silent majority, I'm sure. Armstrong and Coinbase leadership, however, failed to soothe fears that this policy would police employees if they voiced opinions that did not align with Armstrong or this silent majority. One former employee who left the company after the AMA, and to whom Motherboard provided anonymity due to fear of industrial reprisal, said that these assurances were insufficient and workers feared surveillance and censorship, which they probably should be. But moving on from that, Grayscale now owns 2% of the total Ethereum and Bitcoin in the market. So the institutions are growing more and more. I remember about a year ago, maybe even before that, I was making videos on how the institutions are coming. They're coming soon. With Backed and all these different things are supposed to be coming. And then every day went by, they just weren't there. And now they're here. And I have a bit of I think this is a double-edged sword type thing. And I think this is definitely not what was intended in the Satoshi white paper. The Satoshi white paper, Bitcoin was made so that you could just mine this on your CPU, mine this with your GPU, although it was just CPU then. It actually had to be made for GPU later. But... and that it was money for the internet, for small microtransactions. Hey, I like your post. Hey, could you make me a thumbnail? Hey, could you do this for me? And you pay them in Bitcoin. And it was supposed to be by the people, for the people. I know that's sort of a stereotype, cliche way to say it, but that's really true. That's what cryptocurrency is all about. It's decentralized for a reason. And then as soon as the institutions get a hold of it, once they smell that money, they're going to get in on it. The problem with that is that they're the antithesis of Bitcoin itself. Once the institutions actually get a hold of Bitcoin and various other cryptocurrencies, are they really decentralized at that point? Is it kind of like the bankers now have it? And of course the fact that whale miners and whale traders are always going to have that edge on the people. There's no way to make something just for the average person like Bitcoin was intended, because as soon as it actually has value, people are going to realize really quick that, hey, I already have a lot of money. I never needed Bitcoin in the first place, but I'm going to spend millions of dollars to make a gigantic ASIC farm and things like that. So eventually the rich will always get the better, apparently, no matter what sort of ideologies you have behind Bitcoin. But either way, it could be good for the price, and I digress. Grayscale Investments has disclosed that it now holds 2% of the available Ethereum as well as 2% of Bitcoin that is available in the marketplace. The company recently received an investment from the Rothschild Investment Corporation and offers a range of cryptocurrency investment products to established investors. The company has around $6 billion in assets under management and typically deals with major funds and family offices, not retail investors. It attracted a record $1.05 billion in deposits in Q3 2020. And around $720 million of that money flowed into Bitcoin. So they have about $720 million worth of Bitcoin, an unbelievable amount. The company plans to, or at least $720 million in Q3. Either way, they have a lot of Bitcoin. The company plans to continue to accept new investments and buy cryptocurrencies for its clients. And why it matters, mainstream investments in cryptocurrency continues to gather strength. While Bitcoin was shunned by the mainstream investment community during its wild bull run in 2017, more and more established investors are turning to Bitcoin and Ethereum as major central banks create trillions in new money to address deep problems in the world's largest economies. Cryptocurrencies have the advantage of being limited in quantity and not responding to economic factors like a downturn in global economic output. However, I would disagree with that, as Bitcoin has been very closely, particularly since 2020, has been very closely following the Dow, the S&P 500, etc. Basically, the stock market in general. If you see the Dow go up, Bitcoin is sure to follow. If the Dow goes down dramatically, Bitcoin is sure to follow. And if you don't believe me, just bring up a Dow, the Dow Jones chart and a Bitcoin chart since 2020, and you'll see pretty quick. So now there's quite a bit of correlation between the stock market and Bitcoin, and namely because of this, Grayscale now holding 2% of investments. These various institutional investors are now pouring money into Bitcoin, and they have this mindset that if the stock market goes down, they sell. If the stock market goes up, they buy, etc. So we are now closely correlated to the stock market, in my opinion. SEC considers green light for crypto ETFs. This is one thing that has never come across yet. Now, we do have these institutional firms that you can put your money into and receive gains on Bitcoin, etc., with Backed, making futures investments, or Grayscale doing long-term investments with Bitcoin. However, we don't have an ETF, which is an exchange-traded fund. An exchange-traded fund is essentially a bundle of stocks and that people buy on, and they differ from mutual stocks. So you might think, well, isn't that mutual stock? Hold on just a moment. ETFs are essentially a bundle of investments that you purchase and sell on a daily basis, and you can buy and sell throughout the day, essentially as many times as you want until the market closes. And we don't have one of those for Bitcoin yet. So an ETF for Bitcoin could look like Bitcoin, Ethereum, and Litecoin all packaged in, and you're buying these groups of cryptocurrencies and buying them and selling them as if they are a stock market. Now, that differs from mutual stock, because I actually had a bundle of mutual stock at one point, and mutual stock is essentially a bundle of stocks put together, all of which that have a good track record over time, and you put $10,000, $100,000 into these bundles of stock, and they're only traded once at the end of the day. Either people are buy them or they sell them at the end of the day, so it's quite a bit different. The Securities and Exchange Commission, the SEC, is engaging with the market about the possible introduction of cryptocurrency ETFs. So at least they are talking about them, according to the chairman, Jay Clayton. Speaking at a conference on innovation and regulation with digital assets, Clayton discussed the responsibilities of the regulators to drive the implementation of cryptocurrencies and digital assets across various financial markets, including ETFs. Now, taking a break from that for just a second, ETFs would be pretty big for Bitcoin and various other cryptocurrencies because they would have to physically buy the Bitcoin and then have them on the exchange so that people could buy bundles of them at once. So you're not just buying a Bitcoin or something like that. You're buying a bundle of various cryptocurrencies, pushing them all up and driving demand for those ETFs to actually contain those. And it's not just like cash settlement sort of things. Some of them may be, some of them may not be. Regarding the tokenization of ETFs, should be driving that, and we are willing to be driving that. He added that regulators' doors is wide open to meet with market participants who can show how tokenization of ETFs can add efficiency. Furthermore, Clayton said SEC would facilitate this, and it is shown to be beneficial to the market. A number of firms have begun exploring the idea of trading ETFs as a token using blockchain similar to trading cryptocurrencies such as Bitcoin. So you could just buy one token, maybe $100 for this token is a few bucks in Bitcoin, a few bucks in Ethereum, etc. And that would drive a lot of demand. It would create a lot of attention for cryptocurrencies as well. In the last 18 months, there have been many discussions on the compatibility of cryptocurrencies and ETFs in the US. However, the SEC rejected multiple proposals for a Bitcoin ETF in 2019 from Bitwise and VanEck because the underlying blockchain technology did not meet the standard for preventing fraudulent activities. Furthermore, Facebook's proposition of a stablecoin Libra last year saw the market labeling the digital asset as an ETF, while the ETF industry argued otherwise, and so would I. But moving on to even more institutional news. Record high backed Bitcoin delivery exposes institutional frenzy for Bitcoin. So backed is one of the few institutions that actually trades Bitcoin and not just either holds them for long-term profit gains or the Chicago Mercantile Exchange that just basically bets using money if Bitcoin is going to go up or not, which really doesn't help the price of Bitcoin itself. Data from Arcane Research shows backed Bitcoin exchange saw another record high month from September 20th to October 20th. This follows a noticeable rise in institutional demand for Bitcoin from public companies in recent months. Backed, a digital asset payment platform and derivatives exchange, is tailored for institutional investors in the U.S. It's operated by Intercontinental Exchange, the parent company of the New York Stock Exchange. When the volume of the Bitcoin futures market increases, which physically settles Bitcoin contracts, it typically demonstrates growth in institutional appetite for digital assets. As shown above, Cointelegraph and digital assets data reflect a significant surge in futures volumes across multiple exchanges in the month of October. According to the analysts at Arcane Research, 400 BTC contracts are set to expire in October at Backed. Month over month, the data shows a 14% jump from September. Backed's volume and open interest are important in engaging institutional activity because it's one of the three widely utilized platforms by institutions alongside LMAX, Digital, and CME. So again, more and more flowing into the institutions, and eventually it's going to be very difficult for you to get a hold of your Bitcoin. And you could argue that that's a good thing, but it's going to increase the price of your current Bitcoin and Bitcoin overall. But that could be a bad thing because institutions are getting all of the cryptocurrencies and not the regular people that they were actually intended to be for. But moving on, 187,000 Bitcoin drained. Over $2 billion in Bitcoin leave the top exchanges since June. And that's because everything is going to the exchanges, and not only that, but to DeFi markets as well, like Uniswap, Sushi, etc. Uniswap at one point actually had a higher volume than Coinbase does, which is a major, huge exchange in the world. So this 187,000 Bitcoin is essentially being bought up by institutions and being removed from these centralized exchanges and going on to Uniswap and Sushi and all the other DeFi platforms that are out there. Also, the DeFi market itself has caused many people to remove various Ethereum tokens, etc., and move them onto DeFi platforms for liquidity gains. Cryptocurrency reserves held on digital asset exchanges have been dropping to new lows as some of the top exchanges have seen significant Bitcoin reserve balance drops. A few months ago, trading platforms had a lot more Bitcoin reserves on hand, and on-chain data shows a few exchanges have seen some customers readily drain 187,000 Bitcoin from exchanges owned in cold wallets. In February, Coinbase had 1 million Bitcoin under management, and today reserves are down over 9%, as 92,000 Bitcoin has left the exchange. Today, according to BitUniverse's online exchange balance rank tracker, the San Francisco trading platform has 908,560 Bitcoin under management. 36,000 Bitcoin left Coinbase since Bitcoin.com's, which is absolutely my favorite website. Everybody knows that. Reserves report published on June 30th. A number of top exchanges below Coinbase have also seen cold wallets drained during the last 3 months. The second largest exchange in terms of Bitcoin reserves held is Huobi. I don't even know if I ever say that right. I don't care. And the trading platform is down over 53,000 Bitcoin since June 30th. Binance's balance remained the same as the exchange holds 266,000 Bitcoin today, and 3 months ago, Bitcoin held 269,000 Bitcoin. So only like 3,000 less. Similarly, the fourth largest reserve holder, Bitfinex, didn't see much movement in the last 3 months. 3 months ago, OKX had 240,000 Bitcoin on hand, but today, OKX only has 198,000 Bitcoin in reserves. This means 42,000 Bitcoin left OK since June, as 17.5% left the exchange in the last 3 months. And that's because of the DeFi explosion. Also, those institutions grabbing them up. I mean, Grayscale bought like over $500 million, and various other platforms are following. Square bought like 50,000 Bitcoin or something like that, some unbelievable amount of Bitcoin. All kinds of Bitcoin is leaving for in these various investment or payment platforms, or institutions, or DeFi itself. Just recently, BitMEX had some legal troubles with the U.S. government. 3 months ago, BitMEX had 224 Bitcoin in reserves, and today the exchange only has 113,000 in cold storage. I wonder if they meant 224,000 Bitcoin in reserves, because that literally only says 224, and now they have 113,000. So, like, basically, that would be an increase of an unbelievable level. But they say on-chain data indicates BitMEX lost a whopping 49% in Bitcoin. So that must have been 224,000 Bitcoin they actually mean in the article. Whoops. At the publication, Glassnode's exchange balance versus Bitcoin stats show that there's 2.7 million Bitcoin held in exchanges today. Glassnode stats to indicate that out of that 21 million Bitcoin cap, exchanges hold 12.85% of all that will exist, and 14.59% of the 18.5 million Bitcoin in circulation. So an unbelievable amount of Bitcoin is being drained from centralized exchanges. There's all kinds of bad news that comes up all the time with Coinbase, and BitMEX had that legal trouble, which people just immediately withdrew. As you can see, 50% less Bitcoin. I even made a video about that and recommended that it's probably not a good idea to have your Bitcoin on BitMEX at the moment, just because of all the legal trouble and the fact that governments literally want to arrest the owner of BitMEX, the CEO, etc. And also with the DeFi market, that explosion that happened that literally made Ethereum gas prices go up to $14, $15, $20 per transaction because it was so explosive. And then Sushi sold all of the Sushi founder sold all of his sushi for Ethereum, and then then bought some of it back. But it's a pretty bad situation in that sense. But DeFi has been exploding, and then after that, it sort of kind of dumped a little bit, in that a lot of the DeFi tokens are nowhere near what they used to be. So, for example, like Compound here, we can look up Compound, $103, and at one point it was, well over $200, nearly $300, $200 for quite a while there, and now it's just forever dumping. So let's check out Urn, the big one. Yeah, forever dumping as well, $13,000. At one point, it was $41,000. So buying into Urn would have been a tremendous mistake. And really, the list just goes on. I mean, we can even go to Uniswap itself. and $3.06, and that's down from the DeFi craze as well. So the DeFi craze was, again, a bubble, as I described in various videos, that there was definitely a big bubble for the DeFi craze, as I found that there was no productivity in DeFi. There just wasn't. Putting cryptocurrency onto an exchange just for the liquidity factor and the gains of it, well, those gains are in Uniswap, those gains are in Compound, and what are you going to do with those? What are you going to do with Uniswap and Compound? You're just going to sell it. So it's just going to nonstop dump the price. And there really isn't much utility in DeFi, like me taking a cryptocurrency that's worth money and putting it on to get a loan in a different type of cryptocurrency, which is worth money. It makes no sense to me. It's just people trying to farm the liquidity gains from it. Which, fair enough, you do you, whatever makes you money, but you have to admit that there is absolutely no productivity in that in any way. So therefore, all these coins that are coming out are little individual bubbles. Now, don't get me wrong here, DeFi itself is a really good idea, and it is not inherently a bubble, not DeFi. It is not like BitConnect, where it's some outright scam that people are going to pull the plug. It's an idea that is actually a functional non-pyramid scheme idea, in order for the regular people to finance themselves type deal, which is a great idea in practice. But giving out the Uniswap and Compound and various other tokens for putting your liquidity on various exchanges is really just all you're doing is getting that and then immediately selling it. Almost like the proof of work craze. I mean, you mine some Zcash. What are you going to do with it? You're going to immediately sell it for Bitcoin and actually hodl your good Bitcoin. Or Vertcoin comes out and you start mining it and you're just immediately selling it as you're actually mining. And once you gain a certain amount, you put it on an exchange, you sell it. There was no reason to keep it around, and it's just going to go down nonstop sort of thing. So that's my opinion on that. However, the market as a whole is actually doing quite well, aside from the DeFi tokens. 11,300 Bitcoin, $367 Ethereum, which we have seen better days with Ethereum, but at the very least, everything is a little bit up and has been up for a little while. The 7-day trend here, I do actually like this new 7-day trend, that they put on CoinMarketCap, is up overall. And at the very least, we are maintaining over $11,000 Bitcoin. And as time goes on, more halvenings, etc., every 4 years, and as time goes on, we are seeing lower lows every year. The low in 2019, the low in 2018 was like 3,200. In 2019, it was actually I don't even remember, but we're seeing a lower low every year, a point at which nobody's willing to sell their Bitcoin. And that it just sort of stops and people start buying in again. And of course, it's going to go up and then go back down. But we're seeing a bigger medium, a lower low, essentially, as time goes on. So cryptocurrency still proves to be a great investment over time, with large fluctuations, which is why I sort of believe in the not necessarily day trading, but swing trading. If you bought into Bitcoin at 9,000, it goes up to 12,000 and you sell, and it continues to go to 13, but then goes back to 9, not a big deal. You made quite a bit of money there, and you actually picked up Bitcoin again at 9,000 or 10,000, and you made quite a bit, and now you actually have more Bitcoin than you had before, and it didn't cost you a dime to buy that extra Bitcoin, except for maybe a couple fees of selling, which is just maybe a few bucks here and there. But overall, I'm a big fan of swing trading and day trading, but all you hodlers are doing quite well as well, I would imagine. But that's all I have for you guys. Make sure you subscribe to the channel, like the video, helps me out a lot. Share the video, helps me out a lot. Description in below has all of my social media, my Twitter, Instagram, all that good stuff. Follow it if you get the opportunity to do so. But I hope you guys enjoyed it, and I'll see you guys next time.